Hello and good morning, listeners. It's another week, and we're starting off the week with some surprise as the US NFP data led to some big news in the Friday after market hours. Now, this is Almus Market Mornings, folks, with Shikhar Garg, and we are about to begin a highly active data packed week along with a lot of market actions. So, all the currencies had wild swings after the NFP data as the USD, and all the majors, be it Euro, GBP, Yen, all of them dropped. Even INR weakened against the dollar now, which has been decoupled for quite a while. And even though we've only talked about currencies, it was also seen that oil, on the other hand, was found dropping as well, along with the concerns on the early pause of rate hike cycle coming to the fore. Now, this is what market has been discounting for a quite while. And on the other hand, if we have to talk about central banks, BOE signaled red flags as the growth and labor force both seems to be shrinking. And if you have to talk about the domestic markets, we have our central bank coming up with their rate hike decision on Wednesday. So, JK, I'd like to know, what do you think? What would the RBI stance, and what are you expecting on in these volatile times for us to move ahead?
Yes, good morning. Definitely a lot of happenings since Friday evening. Everything was looking good for currencies and bond market particularly, even the rupee. But jobs report changed all that. Well, in fact, it shows how just one number can do to the market. And we had a blockbuster jobs report, 5,70,000 new non-farm payrolls, then the lower unemployment rate and wage inflation coming as expected. Market was expecting 2 lakhs, and that's beating by 2.5 times. Looking at all the headlines today, we may be watching at a different world altogether in the financial world, especially in forex that has turned on its head. And look at these, as I said, 2.5 times the expectation of numbers. Then Fed's Delhi says need for higher rates, possibly above 5.1%. Fed fund futures show terminal rate now at 5.02, which was sometime back at 4.83%. Markets and the Fed view on rates may be possibly converging now. Possibility of Mr. Amamaya being chosen as BOJ governor is known to be, similar to Kuroda in terms of policy. So yen weakens to 132, almost 3% from the low of Friday. Then suddenly, ECB one member talks of caution against policy tightening. Then finally, to end it all, even the geopolitics, US fighter jet shooting down suspected Chinese balloon to be, surveillance equipment, and that was shot down with a missile. So everything worked for the dollar from Friday evening. And as if this was not enough, we had the services sector ISM from showing that it was at a whopping 45.2 versus 49.2 in December. If you remember, the December number, that number coming below 50 for the first time after several quarters, had actually pushed the dollar down even further. And now it's possibly looking like an aberration in December, and it is at 55.2. It's a healthy sector that's showing. And we had the employment component of it, and the price and the new orders index all showing a very healthy number. And we don't know that, where is the research, because the numbers predicted by the market and surveys are far lower than what the actual numbers show, both in terms of the employment as well as the manufacturing and non-manufacturing index. So what can we conclude is that if the NFP number wasn't an anomaly, it could be a while before we see strains on the jobs data, because one thing is the wage component, which is what people are looking at, actually coming more or less where it was expecting. But as the labor force participation is higher, it's eventually likely to be kicked up more also. And also, one more thing, we had in the lead up to the unemployment report, the challenge job cuts were higher, and ADP numbers were also far below expectations. The market positioning was very skewed to the dollar short side, long side on the bonds. But we had one clue, that was the JOLTS data, which showed a record number of jobs available for each person seeking a job. So that market, in the bias that the market was carrying, was ignored, and no, then it was a rude shock. And also the market was behaving yesterday before after BOE and ECB as if rate cuts were announced and as if a Fed had announced a mission completed. So it served as a real shock to get this number, and that's like, that's pushed the yields, not surprisingly, on the higher side. The 2-year yields have vaulted to 4.316. That's 28 BP higher, and 10-year bonds were thrashed and 22 BP higher at 3.56. Interest rate futures now indicate Fed likely to deliver 2 more rate hikes, taking the benchmark rate above 5%. Stocks opened lower, not surprising. Again, as questions have arisen about the assumed Fed put, and bad news coming from Google and Amazon as well. Some support from Apple, and so the losses were moderated. Still, S&P and Nasdaq lost more than 1% on the day, although it was a weekly gain for the 5th week in a row, and perhaps the best performance of a new year is continuing. But will it stall now is the big question, because we have prospects of tightening in the rates beyond 5%, definitely coming on the radar of the market. The monster jobs report also seen the dollar perform its best since September 23, when it had lost more than 12%, from where it had lost more than 12% till last Thursday. It has followed the sharp move up in yields, and the DXY has risen 1.3%. And move has got impetus, as I said, about the Japanese news of the new money printer, Mr. Amamiya, possibly coming in, although the government is seen to be declining that they have made such a move. And almost a one-way move since the dollar, since September, just was looking for a trigger to correct, and the job number has done the job for the USD bulls. Narrative for the dollar becomes once again neutral to cautious, and upcoming data becomes more decisive. But only thing that can be, something that the dollar bears will be looking forward to is the debt ceiling talks, which is still not making much progress. And the more time it takes to resolve, I think the dollar gains will be that much contained. As for the rupee is concerned, that was looking to post good recovery after having weathered the domestic market headwinds. The renewed strength in the dollar index halts this recovery. But the good part for the rupee is continued modest inflows for the bonds, and also another sizable fall in the crude prices, with Brent now trading below 80 due to strength of the dollar. INR crosses, which had rallied to multi-year highs against most major NDM currencies, have started a correction as well, and that could keep the USDINR relatively stable between 81.80 and 82.80. But we are really also having too many moving parts. We have the local stock market wobbles, which is still continuing, which possibly will continue despite several statements from the ministry and the regulators. Nothing has settled the dust yet. So we in for volatile week once again. Thank you.
Okay, JK, that was quite good. And folks, yes, it's a volatile week, as JK mentioned, and we have seen a lot of volatility already in the last few hours of Friday itself, as the bond yields moved higher. A lot of currencies moved or weakened against the dollar, and we've also seen gold, for that matter, crashing. So volatile times are to be anticipated ahead, but it needs to be figured out whether this particular jobs number was an anomaly, as rest of the numbers weren't as blockbuster as the NFP data was. So we got to continue on the side of caution and air with respect to dollar, and see how things go about in the coming days. But one interesting update was the fact that we are now starting to look for the replacement or the succession of Kuroda and Mamiya, as JK mentioned, GK mentioned, is being looked after as the possible candidate for BOJ. But I really liked the comment, as Amamiya is also one of the guys who's continued He's expected to continue with the easy phase, so a money printer as he's been talked about. So it's quite interesting to see what goes around in the markets, folks. We see dollar rupee also opening on the higher side. So I hope you guys continue to manage your risk and stay attuned with the market as there are a lot of updates going around. Thank you so much for listening, and we shall come back again tomorrow with another round of updates.